Now here is Ticky Fullerton on Your Money.
Hello there, I'm Ticky Fullerton. Every night bringing you a full hour of the very best in business coverage across the nation and internationally, especially where business and politics meet. Coming up, the missing link in the Australian energy market is history. Minister for Resources and for the North, Matt Canavan, marks the completion of the 622-kilometre northern gas pipeline from Tennant Creek to Mount Isa. Sky News' Matt Cunningham went across to Tennant Creek for all the action. Another missing link, the Inland Rail turned the first sod on the build this week. CEO for the contractors ARTC, John Fullerton, comes in to report on progress. And a win for James Packer's Crown and Lend-Lease against the state government as the court rules their Barangaroo views of the bridge and Opera House won't be built out. The Australian's commercial property editor comes back on the story with one of the big battles in Sydney town. Now, a pretty big Huawei story to read over the cornflakes this morning. Remember, this is in the context of the sensational arrest in the last fortnight of China's telco's chief financial officer in Canada, Meng Wanzhou, for alleged breach of sanctions against Iran. An arrest made all the more sensational because Meng is also the daughter of the Huawei founder. Now, the Australian Financial Review today reveals that there was a long-standing campaign against Huawei, which culminated in this arrest. 5 months ago, the top spooks of the Western world, representing the Five Eyes nations of Canada, the US, Britain, Australia and New Zealand, they all gathered secretly in Ottawa to discuss just what to do about China's expansionism in the South China Sea and the rise in state-sponsored cyber hacking. Reportedly, a rather good local lobster dinner was involved as well. Now, key to these discussions was to ban Huawei from the new builds of their national 5G networks for mobile. The reason? Huawei is now the biggest supplier of telco infrastructure in the world. It has the capacity to implant malware into its networks, and the Chinese government now has laws which require private companies like Huawei to do the state's bidding. Huawei, of course, strongly denies it would spy on host nations, as they say it would be counter to the commercial interests of the company. Well, so far, the US, Australia and New Zealand have banned Huawei from 5G. Britain has demanded higher levels of scrutiny, and British Telecom, which has a cyber centre in Sydney now, has announced it's stripping Huawei equipment from its 3G and 4G mobile networks, and clearly it won't be using them for 5G. Canada can't be far behind, you'd think. Japan has also put a block on Huawei, and pressure is mounting on Germany to do the same. Interestingly, Nine journalist Chris Wilmot, who broke the story in the Fin, actually tweeted the news out a week ago. The spies are in from the cold, he said. The Five Eyes intelligence chief met in Canada in July. Then came a rare set of speeches. The first by an ASD head, Canada's top spy, the second by an MI6 boss, and all sent or direct or indirect warnings about Huawei. Well, you can look at the state of play from a spook angle, but there's also a hugely important trade game playing out, with the backdrop being the Trump-China trade war. Donald Trump has intervened with the Meng Wanzhou arrest, offering her up as a bargaining chip in his negotiations with Xi Jinping to get a better deal for US tech and all the IP, which really kicked off the trade war, didn't it? And think back to the allegations themselves that Huawei breached the Iran sanctions. When Chinese business ZTE was pulled up on similar charges, the US actually banned American businesses like Qualcomm and Google from supplying ZTE, which could have sent it to the wall had Mr. Trump not intervened to reverse the supply ban. Now, these businesses also supply Huawei, which is now, more than ZTE, you'd think, central to Xi Jinping's Made in China 2025 manufacturing global domination strategy. Well, it's interesting, too, how our politicians have positioned themselves with Huawei. Some, like former Labour Premier John Brumby and former federal Liberal leader Alexander Downer, actually joined the board of Huawei Australia. And it was the Gillard government back in 2012 which banned Huawei from the NBN build. Remember that? The Liberals at that stage were much more open to building a relationship. Malcolm Turnbull, Julie Bishop, Andrew Robb, they all visited Huawei's China headquarters while they were in opposition. Andrew Robb actually said the company had a big future in Australia. Well, in 2013, as Communications Minister, Malcolm Turnbull described Huawei as, quote, a very credible business, and he said he would review Labour's ban. Even if you accept the premise that Huawei would be an accessory to espionage, he said, and I'm not saying they will be, I'm just saying that's the premise. If you accept that, then you have to ask yourself, does that equipment that they would propose to sell have that capacity? Well, on advice, however, Malcolm Turnbull quickly answered the question in the affirmative. They do have the capacity, and he didn't alter the ban back then. Huawei has built 3G and 4G networks for businesses like Vodafone and Santos in Australia, but the advent of 5G occurred just as the security concerns flared up among the Five Eyes. In August this year, Malcolm Turnbull's penultimate day as Prime Minister, Huawei was officially banned from 5G in Australia. Now, as it happens, the Trade Minister at the time of Labour's ban was none other than Craig Emerson, who joined me a short time ago at the desk to talk not only about Huawei but also the upcoming ALP National Conference, election prospects, and his ideas to shake up the tax system. Craig Emerson, nice to have you in the studio. Can I ask you first about Huawei? Because, of course, you were in the Gillard government when the government actually made that decision to ban Huawei from the NBN. And then afterwards, the Liberal government had another look at it, didn't they?
They did, and we took the advice of the security agencies. There was nothing more or less involved than that. And when you're in that position, you get that advice, it would be a courageous or strange outfit that ignored it. Yeah. And so it wasn't done with any great pleasure. It was not done with any other motive other than accepting the advice of the agencies.
And in fact, the Liberal government after that didn't take very long to come to the same conclusion.
No, the Liberal opposition said that they'd have a fresh look at it, and I think that fresh look upon government lasted a few days, and then they confirmed the decision.
Right. It seems such a long time ago, of course, 2012, and we were for a while entertaining the idea of 5G, Huawei being involved in 5G. It's curious to me that we had quite a decision made back in 2012, and yet it took us quite a while to get to the conclusion that no, 5G was not allowed.
Well, back at that stage, it was about the core of the national broadband network,
right.
And then the 5G issue has come up subsequent to that.
Right. What do you make, because you were Trade Minister, of course, you're very interested in trade, what do you make of the latest attempts by Donald Trump looking at trying to sort of possibly saying he'll intervene with the Huawei CEO's
well, that seems strange to me. I mean, you have trade...
Tying it with trade, yeah.
You have trade policy, you have, you know, strategic policy. You shouldn't mingle those two together. And what's the basis of a politician, you know, who's senior as the President of the United States saying that he would intervene in a legal and judicial process in order, at least in part, to achieve a desirable trade outcome? I couldn't imagine.
Well, he says, I think it's very good for what will certainly be the largest trade deal ever made, which is a very important thing. What's good for national security, I would certainly intervene if I thought it was necessary.
Well, there's at least, there must be an allegation against this particular person of violating sanctions. And that allegation is made at the judicial level, if you like, the law enforcement level of government, not at the political level.
But that is a trade issue, that you violate sanctions.
Sure,
and yet this Five Eyes thing seems to have been coming at it definitely from the national security side.
Yeah, so it's I suppose you could summarise it as all being jumbled up together. Yeah. And I think I've always had the view that you have trade policy and you have foreign policy, and you don't do trade policy, seek trade policy objectives through foreign policy, or vice versa.
Right.
Or vice versa.
So it's a bit like sport and politics.
And religion.
Yeah, and religion. Fair enough. OK, well, speaking of sport, politics and religion, the ALP National Conference is coming up over the weekend. What are we to expect?
There'll be a lot of sport there.
Yes, I reckon.
Look, these conferences come around every couple of years. I note in some of the media in anticipation as there's this breathlessness of, you know, everything could fall apart. It won't fall apart. There'll be vigorous debate. I'm sure Bill Shorten's view on key issues will prevail, but he is a very good at listening to arguments. So some of the proposals will definitely get up, including some by the trade union movement. The whole area of change the rules is designed to try to get a wage increase, which wouldn't be a bad thing for the economy, given that consumption spending is very weak. I think personally, we're going into a, you know, I think a real credit squeeze because of the risk aversion now of the banks and of the regulators in the context of the Banking Royal Commission.
But if we've got a slowing down potentially of the economy, you know, people are even saying that maybe the next RBA move will be down, not up. Is this the right time to be looking at industry-wide bargaining, for example, which I know is something that
there is a proposition for industry-wide bargaining, but my understanding is that there's a different proposition, which is multi-employer agreements. Let me just quickly explain that. Let's suppose a union approached one of the big hotels in Sydney or Melbourne and said, look, we're just, you know, for the cleaners, we're looking to get a bit of a pay rise. And the hotel said, look, we're okay about giving that pay rise, but our rivals won't. And we will then get undercut. So what this does is allows a grouping of those hotels and a negotiation on behalf of very low paid people. What the proponents are saying is,
the very low paid people.
Right,
so when I had Innes Willocks in here from AI Group yesterday, he was saying, well, the trouble with that is that it could be a slippery slope to more.
Well, they're different, they're related, but they're different concepts. Pattern bargaining is more, it was used in the automotive industry, and they do a deal with one. I
remember Doug Cameron in the old days.
They do a deal with one auto component or car producer, and then say that deal's done. Now this is the pattern. We're going to the others and say you've got to do that deal. This is actually bringing people together and saying let's have a multi-employer agreement, so we don't have this continued race to the bottom. And I think that, you know, okay, in the 1980s, there was an argument that there was a real wage overhang from the 1970s, and that had to be arrested. Who's really seriously proving or establishing that wages are too high in Australia? The remedy for every economic weakness can't be a further cut in wages. So, I mean, in my view, this is a debate that needs to be had.
You say, I mean, who knows what can happen at a Labour conference like this, but really the Labour Party is going to this conference with, you'd think, a more grown-up, mature, settled set of policies ahead of election than has been the case for years.
Well, Labor wouldn't be accused of being a small target, not saying what it is going to do if it is elected. And Chris Bowen makes a very good point. The Abbott budget of 2014 caused enormous uproar and actually contributed to his downfall. Because before the election he said no cuts to health, no cuts to education, no changes in age pensions, no cuts to the ABC or the SBS. Straight after the election, cuts to health, cuts to education, and people went, whoa, that's a clearly broken promise.
Well, quite differently, Chris Bowen, Bill Shorten are coming with some sort of longer term, not particularly popular necessarily policies like
exactly,
you know,
the negative gearing and
franking credits, and the NEG,
and family trusts, and
family trusts.
Doing actually what John Howard wanted to do a long time ago.
So we're going to get, I suppose, the one sort of unknown is you've also got the left contribution to the Labour Party conference. That's often quite, you know, quite more extreme, particularly in issues like, well, I mean, who knows? There's different positions now that the Labour Party has on things like what to do with people in detention centres.
Sure, but there's always been a left of the Labour Party, and you know, I don't think anything's changed, and nor do I think
they're not going to be the same impact as, say, Tony Abbott has been.
But nor do I think the left of the Labor Party are bad people, or that they shouldn't be there. You know, it's not as if the right is all virtuous and the left is all evil. It doesn't work. Like, people are friends with each other. You know, but the thing is,
it's not going to disrupt the conference.
No, and the really important point to make here is that sure there'll be debates, but there aren't deep philosophical differences within the Labor Party, and I'm not here to, criticise the Liberal Party, but there are very clear philosophical differences there. So you go through each of the policies, but you don't say, who are we? What do we stand for?
Yes.
They are the Labor Party, and they'll work out some of the details.
Do you reckon your idea for the new tax system is going to get any of a run in?
Not at the National Conference. It's probably too fresh an idea, although it has actually been around a bit before. But what we've tried to do with the cash flow tax is to work out how company income tax. To completely replace company income tax. It'd be very effective in dealing with multinational profit shifting. But on the positive side for business, it allows for capital expenditure to be depreciated immediately. That's the immediate expensing of it. We need new investment. This would be a powerful incentive to new investment.
Tough on the banks in terms of interest
income. Well, the banks would
stuff.
go okay because their interest costs would be deductible, their interest revenue would be accessible.
Right.
But again, if they were to invest in any physical assets, they get immediate expensing of those costs.
And how would it fly internationally if we were going alone as Australia?
Well, I'll tell you, if we wait for the world, nothing will happen. Nothing will happen. I think what we've done here, though, is sat down as a group of four of us, Ross Garno, Ruben Finnegan, Stephen Anthony and myself, and said, these concepts have been around for a while. Way back in 1948, there was a proposal like this, but no one's ever said, how would you implement it? You can't just have a big shock. Yes. And what our proposal is, you'd reduce the company tax rate by 3 percentage points a year, while introducing the cash flow tax at 3 percentage points a year. After 10 years, you're done. You've got the cash flow tax. But to make it really attractive, you could give any company a choice to switch at any time from the beginning all the way through to the cash flow tax.
Not too complicated to do all this sort of stuff?
Well, do you want to switch or not? And if they say it's too complicated, I don't want to switch, fine.
Yes.
But their advisors say, gee, this is pretty good to get this immediate expensing of capital expenditure.
Yeah.
Why wouldn't you look at that?
And you're looking to raise, what is it, up to say $39 billion.
Well, because it does deal effectively with multinational profit shifting through overcharging on interest, have very high debt equity ratios.
So the Europeans interested in this?
Charging, well, again, it's been around as a bit of a concept, but no one's really worked out how to do it, how to bring it in without a big shock. And that's what we've done by bringing it in over 10 years. But if anyone wants to switch, they can switch. If they don't, and they say, this gives me a headache, I'm not going to talk to my accountants, we won't maximise shareholder value, then stay with the company tax for 10 years and then you switch.
All right. Craig Emerson, we will chew on that over the Christmas season. Thank you very much for coming in.
Thank you, Ticky.
After the break, weighing up all the major market moves for the week with my Friday panel. That's next.
You're watching Ticky on Your Money. Now, back to Ticky.
Welcome back. Well, let's talk markets. The ASX closed down over 1% today. Local bourse declined around 1.4% following volatile trading overseas. It's been a big week for corporate news, with Westpac getting its first REM strike and a few key ASX CEOs resigning or retiring. Actually, a few in and out of the top 200s as well. Here to recap most of the market-moving stories of the week, I'm joined by a slightly enlarged Friday panel. Michael McCarthy from CMC Markets, Martin Lakos from Macquarie Wealth Management, and Matthew Kidman from Centennial Funds. Gentlemen, it's great to have you all here. Now, shall we go to the takeover first? Michael, this Sigma API thing.
Well, something that investors have been looking for. We all know that it's likely the government will put pressure on the pharmaceutical industry going forward in reducing the rebates that they'll get. And so the answer to that from the industry has to be scale. So a merger of these two groups deals with a lot of the issues that investors are most worried about. And the share price performance today was quite extraordinary. Now, as a trader, I can tell you, generally speaking, when you get a bidder who offers some component of shares and a target, the target goes up and the bidder goes down as the traders put on their arbitrage. Today, both shares rose, and substantially, and that's a very unusual move, and I think it goes to show how keen investors are.
So we've got, well, this is Mr. Milner at work, presumably, because he has a big chunk in API, but Saul Pattinson's. So now we've got Saul Pattinson's and Sigma potentially, and a price line. Are we going to have any ACCC issues? Does anyone know about that? What about you, Matt?
Yeah, well, this has been tried before. We're going way back, 2002, got knocked back. Industry's slightly changed. There's more players now of size, but...
And Michael says there's pressure on the industry to
There's always been pressure. Really low margin business, regulatory issues, pharmacies are hard to deal with. It's not a great business, never has been, at enormous scale to make it work. There's 60 million pre-tax savings supposedly on the table with this. Very attractive deal. You've got second and third player, but they've got 40, 45% of the market. Even though the two shares rose, what you found was that Sigma is nowhere near the bid price still. A lot of scepticism, and we've seen what's happened in the telco sector this week. ACCC, pretty vigilant these days, doesn't like any consolidation.
No.
Even if the industry's struggling, it's the consumer that matters. Are we going to be paying more for what, the products, or in this case, the pharmacists?
So do we think that's we might just wait to see what Rod Sims has to say?
It makes a lot of commercial sense,
yes,
but it might not get over the line just because that's the case.
All right. Well, that's very interesting. OK, let's go to banks, Royal Commission, all of that sort of stuff. Wow, IOOF CEO steps down. Mr. Keller has to step down now.
No surprise, really, given the news coming out of that. And so I suppose to some extent we're going to have to wait and see. And unfortunately for shareholders, the volatility in the share price is just going to have to continue.
It's massive, isn't it? I mean, were you shocked that actually not just the two top, the chairman, the CEO, there's three others who are also under scrutiny. How could that change if you're an IOOF investor?
It's kind of unprecedented action, isn't it? It's obviously been a lot of friction between that top level of management and board and the regulators, which doesn't surprise. Like, IOOF have been shown a lot of bravado, rolled a lot of businesses up over the years and so on. And Chris Kelleher is, one of those kind of aggressive CEOs. Yeah. But the extent...
And cocky in the Royal Commission too.
Yeah, which didn't help, I think.
It's like being funnier than the comedian. You can't be more smug than, Rowena Orr, can you? It doesn't really work for you, does it?
No, it doesn't work, and it reflects badly, and we can all see it. And I don't think the regulators are fighting hard here because they're under the pump themselves. And, they come up to the Royal Commission findings, they'll be asking for a lot more money. And what they've got to do is show that they've got the teeth and that they're willing to have a go.
What about the business model, do we think? Because I've said all week, the banks, even though they've had this bashing, at least they can come back to the basic model of banking, whereas IOOF and indeed AMP, they've both got these models that are well within the crosshairs, you'd think, of the Hayne Royal Commission.
Quite possibly, and particularly that structural conflict between giving advice and manufacturing the products you're advising on. But IOOF has a composition that means it could go towards the product side of things. So if they can sort out the superannuation issues and the trustee issues, they do have a potential.
And there's underlying value there.
Absolutely. Yeah.
And we're a long way, Ticky, for shareholders really to get some respite here, because there's a keen number of stages across the business, both in terms of the banking side and AMP and IOOF, in terms of remediation, in terms of new management, in terms of restructuring, and then changing behaviours, changing culture, big IT spend for systems. So that doesn't happen. Those sorts of things don't happen instantaneously.
And speaking of changing culture, of course, Westpac got its first strike this week, and some of the commentary afterwards was that again that the board perhaps hasn't really got it yet. That the message is no, we're not happy.
Well, clearly shareholders are using the opportunity to voice their unhappiness to the banks, and they did so accordingly this week at the AGM.
Yeah, maybe another one next week. Do we think another strike at another bank AGM?
Yeah. Not impossible, couldn't be ruled out, particularly with the mood amongst shareholders at the moment. The rise of the industry funds, who really have no vested interest in preserving the current boards. It's a
point worth making that,
I think though a lot's been made of these strikes. The reality is it leads eventually in 2 years' time to a spill of the board. Well, so what? The problem here is that there are very few people...
Yes, we're way off that. You just asked Solly Lou.
Exactly. But there are very few people who are capable of stepping up and taking these roles, and that's the real challenge. If you get rid of this current team, who do you bring in?
Yeah, it's in 12 months' time is the real issue, because it wasn't just a vote against. They didn't even pass as an ordinary resolution, let alone getting the strike at 75%. They got pounded. Yeah. And Craig Dunn, obviously former AMP CEO, sitting on the board of Westpac, didn't get got passed, but big no vote on his side as well. The question is exactly that. In 12 months' time, it's okay to kick a company, and it could serve a great purpose to really tighten them up. But let's see what happens in 12 months. It can go from you know, it's like one of those votes. We don't like it, we're going to give the political party a bit of a kick, and next thing you know, they're out, and you kind of go, what happened there? Yeah,
OK.
So they've got to watch that.
All right. So speaking of, you know, new management, there have been a couple of retirements announced. Rob Sindel stepping down at CSR after a bit of an innings.
Yeah, long innings, and I think the market generally would gauge that he's been very good at CSR.
Yeah.
You know, from a financial perspective, balance sheet's in good shape, operationally also a good shape.
Tough time in the cycle, I guess.
Tough time in the cycle. Unfortunately, the share price is not reflecting all that hard work, and that's probably more around that cycle than anything else. They don't have a replacement, so the company said they're going to go and do an international search to find the succession planning.
Did they need to hang on to Viridian Glass as long as they did?
Well, that's also, I guess, to some extent a question that I can't answer anymore.
What do we think?
Well, in hindsight, it's easy to say, no, they should have got rid of it a lot earlier, but that
How
is
much
the
did it cost them?
800, 900, like it was a big haircut.
I read $1 billion, but I mean, you know.
Could have been up to a bit. It's that long ago, I can't remember. They should have sold it earlier. But I suppose at the end of the day, that was the last job that Rob shepherded through.
Yes.
And now it's, you know, it's a good time of year to go. But we're just saying before how hard it is to run a public company now. You don't always make the errors, and there's a lot of pressure. People think you can do things like that. It might have been very difficult to get anywhere near the price they've got for that glass business for the last 5 or 6. I don't know.
Yeah.
But there's always circumstances.
Look, somebody else who's had a champion run, Mick McCormack, he's at the APA. He's going to step down as well, go back to drumming or whatever he's going to do.
13 years. Well, it's pretty clear his exit strategy was a takeover, wasn't it?
Well, that was one of them. But it is interesting, though, that both these chaps, they've now said they've announced, but they're going to give a year because actually the succession's not there, is it? It's not in place.
Exactly.
So I thought that was quite interesting. All right. OK, Michael, another take over the TPG Vodafone stuff. Now Rod Sims has come out saying he's got some concerns about it.
Well, perhaps this is why, too, the market's cautious around the Sigma API deal.
Yeah.
I think this took a lot of people by surprise. In previous discussions, and particularly around media mergers, the ACCC has taken a very broad view of competition. And with this ruling, they've narrowed definitions very clearly, because what the ACCC is concerned about is the lack of potential future competition. TPG are not at the moment a player in any size in mobile or data, but they have the potential to be. Yeah. And because this will remove that potential, the ACCC has expressed its concern. Now, this is a preliminary finding. It is not the final ruling, but it was surprising how narrowly this has been cast.
All right. I need to close, but can I just ask all of you, Santa rally, or are we going to die in the dairy?
We talked about this last week, and I'm still...
We're getting closer to Christmas.
We're going to get a coal delivery from Santa, not some prezzies, I'm afraid. I don't think we're going to
low levels count for anything?
Historically, rallies go from the 14th of December to the 4th of January.
OK, so we've
hit the 14th. Yes. We've missed today. They can be later. I think that we're probably still going to have one. That's my feel, but...
I hope you're right.
Oh, what a great thing to end on. Matt Kidman, Michael McCarthy, Martin Lakos. Have a great weekend. Thank you very much.
Thanks, Ticky.
After the break, a win for Crown Resorts Barangaroo development, plus looking back at the biggest moves by our gas players.
This is Ticky on Your Money, covering the big business stories.
Welcome back. Crown Resorts today won its long-running battle against the New South Wales Government's Barangaroo Development Authority. What's that mean? Well, the court case related to a stoush over harbour views, with fears that an adjacent development, a $5 billion, also government-approved project led by Grocon, would significantly block the Crown development sites of the Harbour Bridge and the Opera House. Well, heard today in the Supreme Court, it was ruled that the government authority breached development agreements with Crown and developer Lendlease by failing to negotiate with the parties in good faith before approving the Grocon bid. Well, for more, the Australian's commercial property developer Ben Wilmot joins me live at the desk. Ben, good to have you here.
Thanks for having me.
It was a bit surprise, this?
I think the resounding nature of the judgment after a couple of weeks of legal argument was quite powerful this morning, yes.
Yeah. So I mean, this must be a massive victory, obviously, for Kevin McCann and for James Packer, yeah?
It's been, in a sense, both Lendlease and Crown went in not knowing what would happen in August when they launched this action, and they've
because it's complicated, isn't it?
It's very complicated, but the very essence of it is that their views could have been blocked by the development authority's plans. They seem no longer to be, because the court has ruled that they did not act in good faith, and that the two companies should have had a greater say at an earlier stage about the development that could have blocked their views.
So really what the Development Authority had was they had one deal set there with Crown and Lend-Lease, and then Grocon comes along and they say, yeah, and don't worry about it, you can have your say a little bit later on, and the court has basically said, no, because then your goose is cooked then, sort of thing.
Well yes, and at all times, even throughout their negotiations, the tripartite negotiations between all the companies at different stages, they did come very close, despite the court ruling today, to agreeing various heights. But I think Crown and Lend-Lease both felt they had to protect their legal rights to those crucial views from hotel rooms and also apartments. Right,
because it would matter to them enormously, presumably, in terms of what value they could get for the rooms.
To Crown, it matters enormously for the value of the hotel resort, because over the long period they'll be running that resort. Even a small increment to the hotel rooms could have quite a large impact over time. For Lend-Lease, the impact was quite immediate. They proposed 2 luxury apartment towers that would be heavily affected by what was being proposed by the Barangaroo Authority.
I mean, it's amazing, given that they were first told to go ahead, you know, and build this thing with the fabulous views. It is pretty amazing that another development would have threatened it, given that their deal was sealed.
Well, the very essence of their case, in a sense, was the government had sold the same thing twice, the same famous views twice. Right. Now, of course, that's not the government's position, but nevertheless, that's from where they started. And it'll be very interesting to see how it is then renegotiated, you know, in coming weeks and coming months.
Yeah, because the ministry presumably has to now renegotiate with the Grocon fellas.
Well, perhaps with Grocon and certainly with Crown and Lend-Lease about what's acceptable to them in terms of sight lines to the Opera House and the Harbour Bridge. So that'll be really interesting how that proceeds. But I should say also, even within the judgment, there was reference to the possibility of an appeal being launched. The Barangaroo Authority's not saying they'll do that yet, but it was in the judgment that is one path that could be pursued.
Nevertheless, it's just a pretty enormous day for James Packer. I'm just hearing in the last few hours that his super yacht that's been taken about 4 years to build is just being wheeled out in Italy. Have you seen the pictures? I think we've got some pictures here, actually. A picture here. Extraordinary boat. Goodness me, apparently it's got a top speed of 18.5 knots, cruising speed of 16 knots, $200 million yacht, just in case anybody was wondering there. But he's had a pretty good day, hasn't he?
It's been a very good day for both he and also Lend-Lease.
All right, Ben Wilmot, it's great to get your details on that one. Thanks very much for joining us.
Thank you.
OK, well, construction on the Northern Gas Pipeline up north is now complete, with the first gas set to flow early next month. The pipeline, known as the Missing Link, will actually link the East Coast to the vast gas supplies in the Northern Territory, and it was officially opened in Tennant Creek today.
It's been described as the missing link in the Australian energy market, but the Northern Gas Pipeline is now all fired up and ready to go.
It is literally projects like this that do build and forge our nation.
The pipeline, built by energy company Gemina, will join the East Coast to the Northern Territory and its vast gas reserves.
We have created what we call the missing link, that's connecting an enormous resource that we think is potentially there in the Northern Territory to an East Coast that is in desperate need of gas.
Gemina says gas piped from the Northern Territory can play a crucial role in alleviating gas shortages on the East Coast and bringing down prices for consumers.
We see this project potentially being the first of a number of links that are going to actually enhance the communication connection that we have with the East Coast.
The 622-kilometre pipeline, which runs from Tennant Creek to Mount Isa, has been 3 years in the making, creating about 1,000 jobs along the way, including 200 for Indigenous people. It's also enjoyed support from both sides of politics.
I've been in public life for about 40 years, and the thing that strikes me about this project is that probably more than any project I can think of anywhere around Australia, it really has had almost universal support.
Gemina is now going through the final stages of testing here at the Phillip Creek compressor station before the gas begins flowing next month. When that happens, the pipeline will be able to transport about 90 terajoules of gas per day to the East Coast market. But that's a number that could increase tenfold if the development of the Northern Territory's Beetaloo Basin is successful.
There's about 500 trillion cubic feet of gas. Australia uses 1.4 TCF or trillion cubic feet of gas every year.
Matt Cunningham, Sky News, Tennant Creek.
Well, given that we're already cooking with gas, let's discuss the year's biggest moves in the energy sector with analyst Saul Kavonic from Credit Suisse. Saul, it's been an extraordinarily busy year in the gas sector, but I guess one thing we can say is that finally Australia is now the world's largest LNG gas exporter.
Indeed, Australia has taken the crown.
Yeah. It took a while to get there.
It's a lot later and a lot more costly than originally envisaged, but we've taken the crown, and those costs, today we saw the announcement from the Ichthys project, a cost blowout, a further $5 billion announced by Total.
That's up in Darwin with the INPEX and Total.
With the INPEX and Total. And that of itself, that project is about 30% over the original budget, similar percentage late. And that's actually pretty exemplary of the entire LNG wave Australia's seen over the last decade, where we're about 30% late on average on all those projects.
Right.
But we are finally there. And the question really now is how long are we going to hold that crown? Because the reality is we'll probably only be in first place for a few years, because Qatar's looking to expand, the US is rapidly catching up, and the truth is Australia's really going to struggle just to maintain these production levels as we're looking to see decline at particularly the Northwest Shelf, Darwin and Prelude projects within the next 5 years.
Right. Meanwhile, China is still the biggest importer?
China's become the world's largest gas importer this year, so including pipelines and LNG.
Right.
And that's actually why we've seen such price support in LNG throughout the year. If we rewind a year ago, there was a real fear that we could see very low LNG spot prices this year, like sub $5 levels during our winter, which is the Northern Hemisphere summer when demand in Asia is lowest. But we've actually seen LNG prices hold up pretty well in double digits throughout the year, and that was all about the uptick in demand from China, taking the crown as the world's largest gas importer this year as well.
So we've got also higher oil prices. That's going to cash up companies. What will that lead to? What are the implications there?
Indeed. So the interesting thing about oil, which has remained high until the last quarter of this year, is if you look at average cash margins for oil and gas companies globally this year, is actually higher than it was even during the boom in 2012, when we had an average of about $112 oil prices. But the reality is cost structures then were so much higher. So the whole industry has tightened their belts. So even when you had these prices, which were around 80 for much of the year, the actual cash margins they made this year was higher than 2012. And as a result, you've seen tens of billions of dollars of cash dropped into the bottom of oil and gas companies' balance sheets, and we expect to see them use that to invest and to make acquisitions in the year ahead.
So who are the likely targets in the industry, do we think now?
Look, there's a few things. I know we've discussed before the idea of consolidation of the East Coast gas market in Australia, where we think Beach, led by Ryan Stokes in the background, is going to take that lead. Secondly, we've put out there...
He's been very active, hasn't he? Jump.
Absolutely. He's also in the Crux project, incidentally, which we'll touch on a little bit about what's happening offshore WA. But on the other two, I guess on the M&A side of things, I think we'll see some action from Santos, where Santos is kind of executing this strategy of diluting itself to greatness. Because Santos has this problem, it's got a lot of fundamentally great assets, but one very large and very uncertain asset, which is the LNG project in Queensland. And it's almost at the point where they seem to be bolting on acquisitions to dilute the share of GLNG in their portfolio and make it less and less of an issue. And that's
a good strategy. I mean, the turnaround strategy has been extraordinary under Kevin Gallagher, you'd have to say.
It has. He really has turned it around. I refer to him as the William Wallace of Australian oil and gas. Defending Santos against foreign invaders from Harbour, the Chinese, the Australian government. And that has been received well by the market. And as paradoxically as it sounds, I think that strategy may actually pay off. And lastly, we put on the table the idea that Oil Search might finally be taken over.
Whoa, really?
Now, look, this is being talked about as an M&A target for a decade, right?
Of course it has,
So we think it's actually more of a target going forward than ever in the past for three reasons. First, the government is no longer on the share register. It left last year, which was always seen as a blocker. The second element here is they're now approaching FEED and FID on the expansion project, and that requires a level of joint venture alignment to happen there. And one of the ways to achieve that is through M&A rather than through these very complicated tolling agreements. So
Peter Botton's pretty good at those agreements, though.
Peter Botton's done some tremendous things with Oil Search, but these agreements are particularly complicated, and they're left very much at the mercy of Exxon and Total, which is two of the most stubborn majors in the world, the Americans and the French no less, and that can cause delay. And that delay, if that causes... So
that could come in. So who are we talking about? Woodside again, or Shell, or...?
I wouldn't rule out Woodside, hopefully having a bit more of a better orchestrated go than they did last time. Total we see as the natural owner, because that would create the JV alignment there. Now, we're not sure if Total would make an initial bid, but we think if someone else came in, Total would seriously consider entering the fray. And I guess the last point on Oil Search is it does come back to Peter Botton. So next year will be Peter Botton's 25th anniversary.
I keep asking him, you know, it doesn't seem to want to go at all.
It doesn't. So it'll be 25 years. And the question is, when he does finally go, and there's still a question of when that will it be to a new CEO, or will it just be handing the keys to a new owner?
What about the other big factor this year, which has been government intervention and the big hoo-ha over various sticks? Well, in this case, the gas intervention mechanism. Now, Matt Canavan hasn't used the stick. He hasn't intervened, has he?
No, and we never were expecting him to, because it's one of these sticks which is great to wield as a threat, but you never actually want to hit with it because it's fundamentally unlikely to work if you were to pull that trigger. Yeah, so gas
prices for consumers, what are we thinking there?
We're still looking in the kind of $9 to $12 range going forward, which is being linked to LNG prices globally. When you see what the stick has been used for, is we have seen gas provided by the LNG projects in Queensland to domestic buyers at subsidised prices. So that's what's been going on behind the scenes. We expect that's going to continue under a Labor government and probably increase under a Labor government next year, focusing on unionised factories and plants across the east coast of Australia.
The West, the Wild West, companies like Shell and Woodside with Chevron has obviously got this vision that they're going to develop up there. How do you see that vision?
There's quite a few things going on the West Coast. So to come back to the announcement today of the deal, I mean, so they announced a $5 billion cost blowout. They also announced a sale of a 4% stake at $1.6 billion. Now, our take on that is, you know, we suspect that Total's actually got a pretty good deal here. We actually think Total's been particularly hard-nosed, like Total usually is, in actually paying costs of this project. So we think they probably owe the project quite a large sum of money. Yeah, no, this is a Total. Haven't been paying. And so Impex and the contractors have been the working capital for Total. And this is the way that Total's actually going to make that payment, is by transferring the share across.
And when it comes to Woodside and Woodside's projects that it's trying to develop, how do you see them?
On Woodside's project, so we look at the Scarborough and Browse project, we're very positive on the Scarborough project. I mean, this has a very long history. I mean, there are people who can spend their whole 40-year career working on not making Scarborough happen. But we think its time has finally come, primarily because Exxon's off the register now and Woodside's in charge, which is a far more motivated operator using its existing infrastructure. And if you actually look at who is at Woodside right now, Peter Coleman's ex-Exxon, members of the M&A team were ex-Exxon, who all had Scarborough within their remit. They know this asset really well. They've put their reputations on the line in acquiring it. We think they're going to take it forward. The risk with that one and the other project, Browse, comes down to joint venture alignment, which can cause delay. They're not perfectly aligned joint ventures between the upstream and the downstream, and Australia's track record on LNG collaboration and infrastructure is horrendous.
Yes, well, they simply didn't do it, whereas this is at least an attempt to do it.
It is an attempt to do it, and one of the big differences is, one, it's not the same people who were around 10 years ago. And secondly, Chevron has always been a very key actor in the West Coast, and we actually think Chevron is now proactively pushing things forward because they want to see life extension of facilities like the Northwest Shelf. So at a high level now, for the first time probably in history, Chevron and Woodside are aligned at a high level. The problem is they're not aligned on the details. Chevron wants its Cleo and Acme fields getting into the Northwest Shelf in priority, whereas Woodside's focusing on Browse, and all that still needs to play out.
Finally, we were talking about how we've got some cooperation now, where of course there isn't cooperation, is all these import terminals that are popping up everywhere.
Indeed. So we've had 6 LNG export trains built in Queensland, right, which was one too many. Now we've got, you know, proposals for 5 LNG import facilities, which I'd argue is 5 too many.
Yes, I agree. I would agree with you. It's extraordinary that that they think that this is going to be okay. Why? Why would the 5th one make an announcement to be the 5th?
It's very odd. Particularly this 5th one, which is in Newcastle, is a site which all the other ones have looked at and discarded. Even though it's a good port, it still has issues in actually accessing the grid and having to upgrade those pipelines to get your gas to your final customers. And it is still likely to be reliant on industrial users. And this is the problem. Any LNG import terminal, so it's that one and Twiggy Forest's one, if they're relying on industrial users, we just can't see an industrial buyer having the appetite to sign itself up for the 5+ years needed at LNG import parity pricing when they can get it cheaper through the pipeline network as it stands, and they have hope that the government's going to come in and actually push prices lower. So really the only kind of business case for LNG imports is for power and retail demand, and that's why the AGL one has a chance, because they've already got that all in-house.
Yep.
The one other one we think has actually got the best case is Exxon's. So Exxon operates the offshore GBJV joint venture. Yep. That's the biggest supplier of gas to the East Coast market, but that's in decline. So for them, they can actually build the cheapest import facility because it goes into their existing infrastructure and allows them to maintain their market share, maintain their supply flexibility to customers, and as an added bonus of hurting the economics of every other import terminal, which would interfere and compete with their leading market position. Yeah. The problem with Exxon is it's Exxon, and Exxon globally, headquarters in Texas, Exxon's actually quite late to the party in terms of LNG trading and gas trading. They're only belatedly getting in there. Is Exxon headquarters in Texas really going to decide that its first LNG import trading opportunity is going to be down in its sleepy operations in Melbourne? And I doubt that. So even though they may have the best case, I don't think that one's going to go ahead. Gosh,
it's going to be a really interesting 2019. Saul, Kavonic, you're a whiz. Thanks very much for joining us.
Thank you.
Well, after the break, the first sod is turned at Parkes in New South Wales for the Inland Rail project. We'll get more from Australian Rail Track Corporation CEO John Fullerton next.
Now, back to Ticky.
Welcome back. Well, a bit of domestic politics to start with. A week after the Canberra chaos, the Prime Minister attempted to reset the agenda. Scott Morrison promised action on religious freedom and announced he would establish a federal anti-corruption watchdog. This is The Week in Politics.
Scott Morrison's government remains 10 points behind in the polls, but he's putting on a brave face.
The comeback can happen.
But Bill Shorten's hoping that won't. Busy already laying out his prime ministerial agenda.
What's the first thing you look forward to doing? In the first 7 days, I've probably got half a dozen things. One of them will be, for example, to get the employers and the workers together and say, how do we start working even more cooperatively in the workplace? Bob Hawke did that first. But that's not a bad idea.
Scott Morrison held his first COAG meeting as Prime Minister, reaching agreement to develop a population plan.
I think today we've agreed on the clearest link ever. One of the most cooperative and collaborative COAG meetings.
And the PM flagged a $1.25 billion health boost.
That agreement will deal with cancer treatment, it will deal with drug rehabilitation.
So they've whistled up a tiny portion of what they've cut.
While in town, it was liftoff for Adelaide to host Australia's space agency.
Stephen Marshall had one message to me when it came to the space agency, which was beam me up, Scotty.
The long-awaited Ruddock Review was released, with Scott Morrison vowing to legislate a Religious Discrimination Act.
There is a mainstream majority of Australians for whom religion is an important part of their life. They just want to be able to choose the life that they've chosen.
But I am concerned if the government, or elements of the government I should say, have some sort of political desire to make religion a political football.
But it was overshadowed as the PM sought to deal with two barnacles at once, announcing he would establish a federal anti-corruption watchdog.
This is a real proposal with real resources.
It is too limited in scope, too limited in power.
The government also used this week to ramp up its attacks on Labor over border protection, zeroing in on the opposition's support for changes to medical transfers for asylum seekers.
And it's all designed to trash offshore processing.
We will do what it takes to keep our borders secure.
It's just one of the issues expected to be on display when Labor holds its national conference this weekend. Trudy McIntosh, Sky News, Canberra.
And Prime Minister Scott Morrison has hit back at Labor's criticism of his toothless tiger National Integrity Commission. Government is keen to win over the crossbench, who will decide the federal ICAC's fate when it comes to a vote in next year's Parliament.
In Queensland, to tackle white spot syndrome virus in the bait prawn industry.
So your stuff is predominantly bait or
But Scott Morrison is still facing questions about his plan to fight the national disease of corruption.
This is a serious body with a serious job and serious resources to do it.
Labor says there's something fishy with the Prime Minister's Commonwealth Integrity Commission because it doesn't go far enough.
Scott Morrison announced a superficial, weak, half-hearted, toothless tiger of an integrity commission that's as fake as he is.
The opposition wants the corruption watchdog to be able to take referrals from the public and have more of its hearings held in the open.
It is better to avoid those showboat type processes where there is cross-examination of witnesses without prior disclosure, where there is no adherence paid to the usual procedural fairness and natural justice rules.
Calling the government's proposal too little, too late, the opposition says the current and past governments would be immune from the proposed commission.
100% incorrect. But being able to investigate things that occurred previously pursuant to existing criminal offences is not actually retrospectivity. That's what the AFP does now, and that's what this body would do in the future.
The government has been considering a national corruption watchdog for some time. It was put under pressure to expedite the process by a growing crossbench who holds the balance of power. The Attorney-General expects that crossbench will now get on board with the government's plan.
So I would be surprised, given that they are enthusiastic for a body of this type, that they wouldn't see this, whilst it might not have everything that every person on the crossbench would want, that they might not see this as a very, very good approach.
If they don't, the Attorney-General is suggesting the government might even give some ground.
There's definitely room for negotiation with the crossbench.
James O'Doherty, Sky News, Canberra.
And we hope to bring you our Inland Rail interview with ARTC's John Fullerton next week. That's all for the show tonight. We'll see you on Monday for My Info. Deloitte's Chris Richardson will help us delve into the details. Thanks for your company.